welcome to another episode of the Daily Wick, where we discuss, or where we're discussing, the fundamentals and technical analysis. The few things that we've been discussing over the last 4 or 5 episodes is understanding support resistance areas, understanding trend lines. We did discuss a couple of patterns like double bottoms, wedges, bull flags, and discussing how volume plays out with them, volume being a key component and an indicator as to whether or not your pattern is going to work out the way it is supposed to. Um, I just want to start by saying today is my birthday, so I'm going to try to keep this to a minimum, this video, because I have lots of things to do, but I definitely want to share with everybody. If you do like the content that you've been viewing, please click subscribe, and it's free. It doesn't cost you anything, and more importantly, that by subscribing, when I do come out with new content, you'll always be alerted to the latest content and the discussions that we're having. Yesterday we reviewed the SPY, the S&P. We also reviewed, I believe, Palantir, and I think we even discussed Apple. I just want to touch on Palantir again today because it happens to be in the limelight. Let's go by following on the monthly, what we're discussing over here. So you have the monthly, which we kind of drew out. You had all these different levels. That we had a trend line here. We had a shorter term trend line that you can see it's clearly going on. And then you even had some support resistance levels set up throughout, just to get a clearer picture. In the weekly, you can see it better. And then, of course, if we apply it to the daily, you can see how it plots out nicely. We had a range of 150.50 to about, I have an alert set at about 162.95 in that area for Palantir, because as you can see over here clearly, I'm just going to draw it out for you so you'll see that it has been ranging between, and then we had a big lift, and we came down, and then again we're trading in this range, and we're right near the top of the range. So there's one area of resistance ahead, about that 162, the top of this candle, as you can see, about 163.32. So I have my alert set up over there, and today we're nearing that number. Why is Palantir so important? Well, we're looking, let's just erase that. Okay, we're looking today at again, what's with me today? We're looking at, I believe, we're looking at a daily chart right now, and this red candle that you see here with the wick, and let me just remove this drawing over here, but you see that wick clearly, and that touched these two areas of support. It actually passed through that 150.32, then touched that trend line, which was support, but it couldn't hold, withstood, stayed in range, broke above, and now it's going to, it looks like it wants to test this 162, 163 area. If we could break this 163 area, I do believe that we'll retest that 190 level, which is a significant move on the upside. Volume has been pretty decent, a little bit anemic the last few days, but for the most part, pretty decent. I'm going to switch now to a 5-minute bar and then explain to you what we're doing. So, as you can see, I plotted out this morning a wedge right over here. I created these two lines, these dotted lines that you can see. And we broke this area right here at about, what time was that? About 11:10. We broke out. Now, we stayed in a consolidated, tiny little consolidation that we had around here. But what's important is you have the pattern. That was set up. You had in the morning, you had the volume come in, and then the volume totally dropped off. and it was pretty flat for the most part until here, and it started going. And let's follow the volume, and that's very important to placing this trade. So assume, let's say, I entered here, I would have been possibly stopped out of, in on this green candle. There was still no volume in it. There was actually red volume. There was some selling coming in. We started seeing volume lift at about 11:45, and then 11:50. 11:50. I'm sorry. What time was this? 1:55. I'm sorry. 11:50 Eastern Standard Time. So you had it started to move up. That was an indication that this trade should work out. So once you started seeing the volume come in, I mean, just look. You had this bar was this bar, and you had some nice volume. That you had plenty opportunity to step in, even here, to watch this trade out. And where did we go to? We actually, so you had the volume confirm, which is very important when you're trading patterns, right? You want to see that volume come in, because if you have no volume, you usually have no follow through. So that volume did come in, and we traded off at 158.24 to almost near where I had an alert set up to about 163 for the cross of that 163, which, at that point, I think if we do cross that 163, you'll probably test the 190. That's what I'm looking for. I did not take this trade, although I really wanted to, but unfortunately I had a meeting at the time, so I wasn't able to take the trade. But this was really a perfect setup, and that's the importance, I guess, also in understanding key support and resistance levels, and just setting and understanding patterns. If you saw this wedge, it was clear that it wanted to break out, even if it broken to the downside. You still had room to play that to about the 150 149 area. But when you have the volume coming in, and we already slightly gapped up in the morning, and then you saw that breakout, and then you have the volume following up to confirm, that's always a great thing. And the reason I'm stressing it is because it's not enough to trade off of patterns alone. Just seeing a pattern means nothing. The other day, like for example, let's take a look at the other day here, where we had that double bottom right here. Um, Part of it's not, you don't see it that clear. You can actually see it better if I put a line so that you see there's a bottom here, bottom there, and then we bounced off of that neckline. I'm just going to remove that back to candlesticks. But when oops, let's remove this again. But when you take a look back at that double bottom, it wasn't as attractive volume wise. Meaning the volume did come in when the break happened, but we were selling off, as you can see, and I have it kind of drawn out. And you could do that for yourself also, so you have a visual of what the volume looks like, so that you know that if we start upticking above where you just drew out a line, your trend line on volume, and you see volume coming above it, well, and you have a nice setup here of a double bottom. Well, you had that break of the neckline that ran to from, let's say, 150.50 to about 153.50. The volume was, if you ask me, very heavy in the morning. You had a lot of selling in the morning. A lot of that was insider selling, but it was elevated compared to previous days. But then you had that spike in the volume, and that's kind of what lifted it. But if you take a look, the volume was still somewhat anemic, and that's kind of why you have, these small bars just slowly grinding up the rest of the day. Whereas, oops, I'll have to fix that later. I don't remember exactly where it was. Let me just fix that quickly. Hold on a second. Okay, let's see. I think that was. I'm not sure. I'm probably going to have to do this over again. But anyways, going back to that 5 minutes, but over here today, you could see clearly how the volume dropped off. You have the pattern there, and then bang, the volume just came in, and I mean, we'd had some decent volume, taking it up to about 160, 190. So that was another unbelievable opportunity that was out there for all those that were watching or waiting for the low hanging fruit. They missed a great opportunity if you didn't take advantage of it. Let's take a look at the SPY today. Let's take a look at a monthly. I use, by the way, TradingView if you guys ever use it. It's a great system. And we're, again, on a monthly, we're at all-time highs. On our weekly, we're like just there. And our daily, we're in a range right now of, let's just put another, yeah, let's put it right here. I'd like to see to break above. If we can get above here and close above, it's very likely we'll test new highs for the day if we don't break them earlier today. But the SPY is looking good today. Let's take a look at Apple. Let's take a look at, first off, if you were trading today, if there were any patterns in the SPY. I don't see anything that stands out particularly to me, but let's take it on a larger time frame. Sometimes if you play around with the time frames, you can identify patterns in longer time frames typically. Even if you don't see it in a 5 minute forming, you could go into a 2 hour or 4 hour. But right now, it looks like it's just, it's just quiet. So that's the SPY. Let's take a look at Apple, how Apple's been doing. Apple came off a little bit over here. So we have Apple at breaking above that 236 area, which I believe it alerted me the other day. But really, the volume is not there. You can take a look here. This is what we want to see in volume. I'll just move myself somewhere over here. Higher elevated volume. You want to look for pockets of higher volume. That's usually when you have move. You can associate the moves with the volume. I mean, and obviously the heavier the volume, or the more volume you have, the more explosive the move. Typically, the more explosive the move. But so far, nothing's showing up over here. We're just standing around in this range between, let's say, around 235 and around 240. But we're, again, near all-time highs, if I'm correct. What happened here? We're near all-time highs of 257. I would really like to see it above that 240. If we can stay above the close of 240, I think we could retest the 260 area. So again, these are things that if you have the support resistance lines set up, as you can see by me, like I can, and I think I have an alert here at the 236 area that if we should hold above, it will alert me to put it on my chart for the following morning, where I possibly want to take advantage of that trade, because I do believe that once we do gain strength, and assuming the market's in our favor, we'll probably test that 260 again. I'm not I don't read crystal balls. I just read what the chart is showing me and what the volume is confirming. Patterns are consistent, and you see them over and over again. And the more we review and understand, the better off we are. By the way, if you guys have any questions of any particular stock that you want to watch, or something that you want an opinion on, please feel free to drop it in the comments below. Also, if you don't mind, just click the subscribe button. It's free to subscribe. You'll have all our latest videos at your disposal. Sorry, and hopefully we could share. For me, the importance of sharing my knowledge in technical analysis is I gain more clarity as I review it, and by doing such, going through charts just creates new opportunities, fresh eyes, fresh perspective, which is what we should constantly be doing as traders. Stock screeners are great, but you need to be able to screen the stock too, not just screen the most active stocks, etc. That's great. If you don't have patterns and you don't understand support resistance on different time frames and you don't understand volume, it's worthless. So it's important to just get the basics down. With that said, please like and subscribe. And today's given my birthday, I'm going to cut this video a little bit short, but I definitely am probably going to, in the next video or the video after, discuss somewhat of an itinerary of the different subjects we'll be talking, so it's more organized. I do want to move more into patterns, and then when we discuss patterns, we're going to be going through lots of different companies that we're watching. We're going to look different time frames. Like here, just to give you right off the bat, like I just literally opened this up, and I'm going to move myself out of this picture, but just to give you an idea, like here, right here is a double bottom. We're looking at IBM right now. We had a double bottom, right? We could have taken advantage of this. I mean, this was in November, December. But I'm just giving you an idea. Patterns are pretty repetitive. And the more you study them, the more you understand your support resistance line and the patterns and the volume, the more successful you will be at your trades. With that said, thank you for following me on the Daily Wiki on the Daily Wick. And I appreciate your support and hope to continue to bring you relevant content. If there's any issues with the videos that you're having, whether or not you're seeing the screens properly, please let me know so that I can adjust accordingly, because I have no feedback, and feedback is really important to me. With that said, have an awesome day, a great day, September 9th. It's my birthday. Wishing you well. Signing off. Akiva Boaz, the Daily Wick.